let's quickly move on then. And we have Anil Gupta, Chairman Managing Director at KEI Industries, here to talk a little bit about the outlook for business, the raw material cost impact, and guidance on financials. Thanks so much for taking time out. So you do have a very strong presence in the EHV segment, a market share of clearly 9%. Are you seeing an increase in demand within this segment? And are you planning to increase your focus maybe here?
Good morning. Thanks for inviting me to your show. Yeah, EHV is, as the urbanization is growing, the demand for extra high voltage cable is growing, and we expect it to take it off substantially in the coming years. We are also, at the moment, we are operating almost at the full capacity, and we are focusing on new capex on this particular vertical in our new capex coming up at Sanand near Ahmedabad. We are going to put up a full new set of equipments to take it forward.
Growth coming from? Is it coming from the high, high transmission wire area? Is it coming from really the industrial part? Where is the growth coming from?
See, basically the product is used for power transmission. So whether the source of generation is solar or whether the source of generation is, thermal power or any type of power, this is for evacuating the power and, linking it to the grid for the intracity or interstate grids. And then, or sometimes where the industrial units are requiring large power, they need to install their own dedicated underground transmission system from the grid network to their factory to get the large amount of power.
Tell us a bit about your buyers. Are you dealing with, when you are supplying for industrial transmission, are you dealing with private sector? Are you dealing with the state government? Are you dealing with central government? Give us a sense of that.
We are selling, dealing with all the segments. See, most of the infra projects are, driven by government agencies, whether it is central government or state government. We supply to EPC contractors who get, turnkey contracts from these projects. So we supply our cables to those private entities who works as the EPC contractors and take contracts. Also, we supply sometimes directly to the power utilities from the direct tenders, but basically they are mostly supply tenders. We have reduced our focus on direct EPC contracts and remaining focused on our supply contracts with them or through the private sector. Secondly, the industrial segment where large industrial projects are coming up, we are also focusing on that, which are either in steel, cement, pharma, or oil and gas, petrochemicals. So we remain focused on that and supply our all type of cables through that. Thirdly, the real estate sector, where we are focused on the real estate and the construction sector. And lastly, the infrastructure sector, which includes metros, highways, etc.
As you look into the future, could you tell us that which segment is likely to go through a boom time and which segment could go through a competitive intensity?
I think all the segments are growing very fast, and I don't think that we can underestimate any of the segment. Real estate is growing very well. Infrastructure, there is a huge focus by the central and state governments, and in all the segments, industrial segment is growing because of their own demand and as well as PLI given by and the new push to the manufacturing sector. Similarly, all the I think power sector is growing, driven by solar, thermal, as well as the investments in T&D, transmission and distribution.
Why is the entire, I'm referring to a brokerage report here, that the Indian wire and cable industry in FY23 was 70% organized, 30% unorganized. Where is that number now? And can I say large part of the organized versus unorganized migration is already over for your sector?
You take any product. in every product, there will always be some percentage of unorganized market which operates in the small towns or rural areas, or so is here. I can't figure out what is the exact percentage of unorganized market versus organized market. But I'm sure that with the GST and with the tight regulations, the unorganized sector is coming down.
Or profitability in any way being impacted on account of the volatility in raw material prices?
So far as we are concerned, our focus has always been to ensure that we always have adequate raw materials, especially metals, either booked or in the factory to take care of the orders already booked. The new orders, whatever we book, we always keep on increasing or reducing our prices with the metal prices going up or down, or not only metals, but other raw materials also. So it is completely passed through. So far as retail is concerned, the prices are revised almost 15 to 20 days if there is a significant movement in the raw material prices.
2,000 crore top line company now. 3 years out, what to your mind could be the quarterly top line?
We have been saying that we are growing at around 16 to 17% CAGR for last 15 years. And we would like to continue within that direction. We don't want to jump too much of ship to put ourselves in a financial mess and create too much of debt burden on ourselves. At the moment, we are almost debt free, and we would continue to maintain that status.
Your EBITDA margins closer to 14-15% as you grow, or it will be in and around 10-11% only?
At the moment, we are operating at around 11%. And at the moment, I would not like to comment on the financials because of the, silent season.
Okay, good to have you. Thanks so much for joining in and giving us a view on your business updates and what the key focus areas are for KEI Industries. Tell you what,